Welcome to TradeTheMBA.com. This is John. This report is for March the 1st, and well, we had that early breakdown below the ABM gold, which we haven't really talked too much about that, but when we do get below there, usually from my viewpoint, you wouldn't be leaning more towards short than long until you get back above it. And in this particular case, we had been looking at short-term buyers were the only elevation that we were getting at all coming through this setup, and we've also seen the Power Mode 2 decline. What we were looking for from the Power Mode 2 was the cross of the magenta above on this decline would have really signified a significant downturn. Some people might call it this, but as we've talked about, we were expecting that once some selling started, we'd already had this one brief move that was bought back up, and they did it again, coming through to push back up towards the highs, but not quite able to get there. And then once that trigger selling starts, it really begins. And then even on Friday, they tried to push back again. This time hit the ABM magenta and couldn't do that and went right back to the 50%, which in effect, that close at 38 was just above that under 37 number that we had from the open. I forget, it was 36.92 at the open right down here. So still an improvement for all of what was February. But going into March with this weakness, now you got a full DOC reset, but that rejection of the orange suggests that we're in for some more back and forth weakness going forward here. So even if midterm buyers are able to lift up, it's likely not going to be a sustainable setup unless we get a turn back down in that configuration. Plus now we have steel 155 over the 2 science. So the steel has crossed below as well. And so from a daily standpoint, it doesn't take much to go back to the other time frames and start looking at them, and you get a collection of viewpoints from the daily to the 50K to a 5K that pretty much give you the broader viewpoint of where the algorithms are headed and how they're moving things. So from a NQ standpoint, much worse performance, and that's because it had been the leader. It didn't have any attempted turnaround, and while you don't have the orange spiking back up, you've never even had the steel cross back above cyan for buy configuration once the initial sell came in. And that was literally, you had the DOC spread, which took place all the way back over here in early February. It really compounded itself when the steel crossed above and then crossed back below, and that was literally right here, and roughly around that almost 14K number. And from that point on, it's just been a decay, and now you're already at 12.8. So plus we look at that extreme, and we're below the red line here, and we don't have that on the S&P, but it's an indication that each time we see that, the likelihood of those lows being retested, the first thing you're looking for is the move back up, and whether it's coming off of the buy configuration with the orange down below, and in this case, not expressing it. But again, in those liquidations too, like I pointed out, everyone talks about the impending hyperinflation that's going to come, but they've been talking about that for 9 years since the first QE after the 08 situation was the beginning of the, at some point it would kick in, and like we said, we'll see the evidence of that when it happens. But once they've gone to the zero rates and no growth, as long as you don't have wage pressures, and wage pressures are the only thing that really force the start of inflation. Certainly asset prices have skyrocketed, but that isn't necessarily inflationary. And from a euro standpoint, of course, not good news coming out of the euro. And you can only artificially pump it so long before it just pulls back. They're still keeping the range quite high. I mean, it's still even at the 120s. It's excessive for where it's at. So we had a long day on the 5K. Thought we'd go through some of these things because there were some interesting setups that developed within here, and also some complicated ones, like in the downturn when you have that steel crossing, there's always the concern that that's going to be the turnaround. But typically we always look for that orange where you've had the cross of the steel within a bar or two from that. In this particular case, though, we were still looking at fairly soft shakeout from that and the dip below the red line. So when it revisited the bottom, then you get that higher P2 pivot right there, and the dip along with the green coming above, that's a clear indication go. And then when the DOC spread starts, right after it, we're looking for the first power mode 2, and in this case, it kind of had a flat goal. It wasn't until the actual decline of the shakeout started, and you just maintain this green under red. What I'm expecting from that standpoint is a green to really start pushing up, and it did not, and that usually gives you that run down further to the lows. Now, of course, we're hitting these algo levels that have been marked right here when we see these little magenta lines from previous setups, and it's no coincidence that that's exactly where the market goes to. They're odd numbers, but they still are relevant from that aspect. So we get into a secondary setup midpoint in the morning, right after the open, and well, this was just slightly before it. We started with that decay. So I mean, that was some pretty active pre-market, is what I would call that, which was usually an indication that you're going to have a busy day ahead. So I always look at that, how much range I've gotten in the pre-market from the European session. And what I thought was interesting about this is, well, we get this blue candle, which is usually that indication where we've had a P2 pivot, orange is dipped down below. In this particular case, you're not getting that, what I'm looking for, which is within, the last 4 or 5 bars, that dip at least of steel down towards the zero line and back up. And because of that failure, as well as, the shakeout having been below 13 and then just rolling back over, unable to sustain itself. It's something I've been working with in changing from an adjustment for the colors. But the closest you got to it was right here, steel at 156, still a little too high, and it didn't correspond to a significant move at all. And that's where we got the continuation of it. So really an important feature to kind of be paying attention to when looking at that for rebound turnaround setups. Certainly overall, when we get these, they do end up producing a higher ending close. The difficulty with that one is the drawdown that can take place from it. Usually what I'll do is when I have a situation like this, it becomes a marker where I'm looking for any breakdown below it, and then it's a matter of you can trail for an entry to capture a lower move, or simply wait, as in this case where we got close again. The move was about 258 there on the steel at the bottom of the screen. Produces that buy configuration, and it looks good. Not quite enough to get it going, because you're still looking at that shakeout below the negative 13. Finally gets above, and that's when it gets a little bit stronger, because now you've moved into a new zone. Shakeout has now moved strongly towards the plus side, even if you wait to the first bar, which is why it turns green there, where you moved positive, you're on with it. Now, interestingly enough, it starts that move exactly at a previous algo level at the 06 point, and continues to plug along. And this was just a lot of volume within the day. Each one of those DOC spread configurations producing that green coming back above, that's usually your turnaround. So it's sort of like a wash, doesn't really do anything for you when that happens. It happens after runs, but you're still looking at that 06 level as a retrace, so just something that stays in the back of your mind when you get these divergences to the upside, because they continue to produce new positive extremes. All of these were on positive extreme, and then the next setup, same situation, also on rising gold at this particular point. Reaches that peak for another DOC spread, fine and dandy. Another sell configuration took place, got us back just below the 50%, which is a pretty decent retrace, going from just where the 100% back to the 50. At that particular point, you're looking for that. And in this particular case, you had the move above, came back below, and then finally popped back up, and the orange literally dips right below. So, and right at the 50%. So that one typically was a lot cleaner. It's easier when it does that perfectly for you. Then we get into the same cycle here. Again, you get the same blue. Without that reset, it does happen a little bit later, but you don't have the orange dip. And you can see the orange doesn't cross below. It then makes the move again as you get to that 0.87, so under 1, I like from that setup, and then the orange drops below. This one I'm considering as being a much bigger run, and that's the key aspect of it. And so, boom, and you can see that went all the way, literally from the 0 all the way almost to 100% right there. It's like declining 100% really gave it the final capture point. And then we went into a little bit of, same configuration, DOC spread, sparks around with the green over, and also strong from the Power Mo 2. The other interesting one about this one I wanted to point out too is the Power Mo starts its move with that magenta crossing back below. In his other cases, you had slightly falling and then it crosses over, so that's a little early when it comes to the dip of the orange, and it didn't quite make it underneath on those. This one met all the criteria all at once, and it produced a pretty strong move. And then towards the end of the day, we ended up with the DOC spread again. This time we started with the Power Mo 2 crossing below, no real activity from the orange in that, but you were just under 15 with the magenta, which, when it's over, you're usually looking for continuation or at least a hold. You had a series of positive extremes, which made it pretty easy to gauge it, because I'm looking at it from the positive extreme standpoint. It's like, okay, you get the fill, it's taken right there, and then boom, it breaks it. Well, the next one is not down until you get to the 16 level, and sure enough, took it all the way to that, and then even further filled in that 06 from the beginning of the day. So complete workout from an algorithmic standpoint. Beautiful. You gotta love that. Now, from this orange signal, same situation. We don't have that dip towards the 0, so I'm expecting that we're probably just going to get this kind of mediocre flatness in between, unless we get the open of the beginning of the week where it comes back down, and we'll see that in the pre-market. Gold rising, without this additional setup, you're going to need to see that red DOC break into the next zone here, and then 7.5, as well as having that green crossover. That would be the only way to override it. But it's happening right at the pre-described algo level of the first breakout. We can laugh at that, call it a coincidence, but not really. That's the long and the short of it. So exciting stuff, and pretty close to having those adjustments made that will give us the cleaner maintenance of the staying red and then flipping at those key points. There's just some difficulties with some of the math and trying to get the colors to do exactly what I want them to. Getting closer. As always, though, I will update you on the Skype chat. Trade well. We'll talk to you later.